All right. Well, first, thank you all for coming and coming to the booth, coming to see us at the Standard Chartered SC Ventures booth. Today, we're going to be talking about Beyond Crypto Winter. It's the title. My name is Dominic. I lead the SC Ventures team here in Hong Kong, and have been intimately involved with our Web3 activities, including some of the metaverse work here with Sandbox. So the topic, Beyond Crypto Winter, I think, well, most of us, I think we're all at Token a couple weeks ago in Singapore. And one of the messages that, people kept talking about was, oh, crypto winter, it's crypto winter right now. I think everywhere you read, it's VC winter. And I don't know. Personally, I feel like it's probably a little bit more than either of those. And I probably wouldn't categorize it that way. So it's something I was thinking about, and then I started talking to our esteemed panelists here, and we decided to have a panel kind of on that topic and discussing kind of global macro, what it means for the space specifically. So kind of without further ado, I'm actually going to let everyone introduce themselves briefly, give a minute on themselves as well as their organization. And I'll hand over to you, JD.
Right. Good afternoon, everybody. So my name is Jean-David Péquignot. I work for OSL Digital Security, which is an SFC licensed virtual asset trading platform in Hong Kong. We are also part of BC Technology Group, a Hong Kong listed company. So we offer digital security trading, brokerage, exchange, as well as custody in the Hong Kong market. We also run a global business, so I'm also head of our trading business globally. We've got a global presence in Asia as well as Americas. And yeah, so I'll leave it here.
Cool. Hi, everyone. My name is Michael. I'm a Senior Vice President at Bullish, Global Head of Sales. Bullish is a centralized, regulated crypto exchange. Our kind of core differentiator is that we use these things called automated market makers to provide liquidity in a differentiated manner, primarily for many of the institutions that we connect with. But yeah, very excited to be on the stage and to chat about kind of what's happening in crypto winter and what's beyond.
Yeah, hi everyone. My name is Richard Swainston. I work for Medico and I'm the sales director for Asia Pacific. And at Medico, what we do is, we provide kind of a market-leading platform for institutional custody and orchestration. And what that really means is that we provide the underpinning technology so that organizations, typically in the tier one licensed regulated space, can manage digital assets and actually build their digital asset businesses. We work with the likes of Citibank, BNP Paribas, Societe Generale, Zodia, which is a SC Ventures joint venture with Northern Trust.
Okay, great. All right, thanks everybody. So let's get into it. So I guess following up on kind of some of my earlier comments, I kind of look back to 2018 as kind of a ideal example of crypto winter. Markets felt pretty buoyant, a lot of liquidity flowing in the system. There were some global headwinds out of the US and UK at the time, but generally speaking, pretty healthy markets, yet crypto took a pretty big hit. This feels, again, to me, quite a bit different, and I'd like to get some views on what people think about how that global macro specifically is impacting the space. JD, you want to start?
Sure. Right, so I think there is definitely external factor. There's also a bunch of idiosyncratic crypto factor who've led to this crypto winter. So maybe I'll start with the more crypto-specific events. Obviously, in May and June, we had a major failure in a centralized entity who've been lending to the broader crypto market and took unwarranted risk. And so when that exploded also alongside an algorithmic stablecoin, I was poorly designed, poorly managed. So overall, that really triggered and had a massive trigger effect on the crypto kind of ecosystem and the overall asset class. So I think these are very crypto-specific factors, and you can't really kind of deny that. And it was also on the back of a relatively buoyant market in 2021, early 2022, when DeFi, NFT were really at crazy level, so probably hyperinflated. But also, I agree with you in the sense that there's been also macro factor that have definitely weighed on the asset class. So in the first quarter of the year, the equity market have also come under pressure, and so in that sense, at that time, the crypto market held relatively well. So Q1, I'd say probably the broader market was down 8%. If you look at the broader index, so a crypto index. So it was not necessarily, a large, there was not a strong multiplier as we've seen in the past when market gets or risk-off environment starts in. The crypto market cannot really take a hit with the multiplier. So that's kind of the two aspects. And right now, I think the market is also really struggling to find safe haven assets. And so Bitcoin has, in a way, failed to provide that safety. Inflation hedge, we've talked in the past, that doesn't really materialize. But equally, that's true for other type of haven that play that role in the past. So gold is down 20% since the start of the Ukraine war. The yen historically has been strong, and it didn't really is not holding well either. Silver is another market that is 25% down this year. So really, it's to that point, the macro environment is completely driving all risky assets.
Great. Yeah, thank you. Thanks, JD. Appreciate it.
Yeah, I've maybe got, I don't know, a slightly different take and maybe look at it from a different perspective, and it's more of kind of like a socio-economic type perspective. So it's obviously difficult to avoid things like, what's happened over the last couple of years with COVID. And maybe one way to look at it is that, are we facing like a crypto winter? Are we just actually facing kind of the tailing off of, well, there are a lot of people that were basically sat at home that couldn't work. So they start to get into certain areas, right? Maybe they start to trade crypto because they see it as a way to maybe, hit the jackpot and get out of their current circumstances. There's a massive rise in play to earn games. Now, why would that be? Well, there are a lot of people that are affected by COVID where they couldn't actually work. So it was maybe a means for them to generate an income. And now we're in a position where things have started to open up, and for want of a better pun, we're now back in the real world. And maybe that's just naturally tailing off, and things are actually just balancing out to maybe where they should be, as opposed to deeming it as being like this full-on crypto window. Now, I don't disagree that there aren't other, macroeconomic factors in that, but just to try and put like a different spin on it, maybe that is something that we're not looking at and from kind of a high level and taking into consideration as well.
I'd say that there's kind of two things that come to mind, and I think Yatsu had a really good quote this morning. He was like, a couple years ago, winter meant ice age. This time it's just a little chilly, right? And I think this idea of how this particular winter, it actually involves a lot more institutions than in the past. And I think there's also been this rock bed of investment and R&D that's been put in by significant players, not just simply hobbyists, which I think also kind of undergirds and builds a foundation for what's next. And then the second part of it is also, I think crypto and digital assets of Web3, it's kind of finding its footing. I think there is definitely like an element of this cycle, and I think a lot of the stuff that JD kind of alluded to, it's not something that didn't happen elsewhere before, but in crypto it feels like it's just accelerating a lot faster, and hopefully that means that it's also accelerating out of it faster as well. And I think that with that being said, it's one of those things where like, yeah, it's not particularly great being in a winter at the moment, but I don't think it has the same detrimental effects as what you've seen before, and I think there is a way forward.
Yeah, no, agreed. I mean, I guess, I think back a bit to that 2018 time, and there were quite a few people who were saying, see, I told you that was all a farce, right? I mean, I think my dad might have said that to me a bit, right? Like, oh, it was never going to last. And I don't hear that now. So I think that's one of the main differences,
But how many times has Bitcoin apparently been dead and over, right?
Yeah, no, exactly. although it is an interesting point about you know, the whole COVID effect. That is what kind of brought us out of that last trough. So it'll be interesting to see what brings us out of this one. Although it does feel like that acceleration is happening faster. I agree. Well, look, I guess, you know, another thought, you know, we do talk quite a bit about, you know, Web3 and how that's being impacted by the current crypto winter. But we kind of pack a lot into what we call Web3, right? I mean, Web3 is DeFi, it's crypto, we talk about stable coins, we talk about metaverse, kind of pack it all into that Web3 moniker. I'm curious to hear what people's views are on how different segments within that Web3 are faring, and maybe some of them are faring better, some are faring worse, some of them have different inflection points. They're obviously at different growth cycles or maturation cycles. Richard, why don't we start on your side?
Yeah, sure. And I don't know, maybe I've got a slightly blinkered view on this from working in kind of the infrastructure space, but I mean, particularly what we see is that I think, one, you need to differentiate between things like crypto and blockchain, and also crypto and digital assets. So if you take digital assets as a slightly broader segment, then what we're seeing happening in the digital asset space is a lot of the larger institutions are now actually building their infrastructure. So they're looking at how to put in place this kind of these foundational pieces that can then help them actually, you know, get into, I always call it, you know, maybe some of the sexier stuff, the DeFi, the lending, the staking, all of these types of things. But they are using this time in that infrastructure space. And one area that I probably can't go a day without talking about now is tokenization. So you can talk about crypto, you know, till the cows come home type thing. However, the typical, you know, the standard conversations that we're seeing now is it's not really about crypto. It's about tokenization of bonds, tokenization of securities, and a potential where there's a world where we have, you know, all capital markets actually sitting on chain. And particularly with the clients that we talk to and that we work with, that is where their focus is, as opposed to it being necessarily on crypto or the metaverse or, you know, wherever. So what they're doing is they're building for not necessarily now, but 5, 10, 15 years in the future, where again we have this world where capital markets could all sit on chain. So that's where I guess we're seeing you know, big movements at the moment and a lot of activity.
Yeah, I guess from my perspective, I'm also kind of a little more biased and leaning towards infrastructure stuff, but I feel like there's been a significant amount of time and effort that's been put into, you know, building real use cases. And I think in particular, when you think about financial applications, a little bit of it just follow the money, right? I mean, where have people deployed significant amounts of capital because they found a use case that makes sense for them? And I think it's been interesting to see how there's this like digital universe that effectively is Web3, but it comprises of like digitally native assets, digitally native identities, digitally native communities. And I think that's where you're seeing a significant amount of that kind of frontier forming in terms of adoption. I think the other place that I'm quite keen and kind of pay attention to a little bit more is also gaming. You know, I think that a lot of the people who work on this gaming side of things, they understand that gaming has been social for many years already. It's not really been about, here's an IP, you consume it, you know, or you consume it with the friend sitting beside you, holding a controller. No, it's more social now. And I think it's not as far of a leap for them to kind of make it kind of very meaningful in terms of use cases where people actually do value, kind of combining together the other elements of Web3.
Yeah, so I echo Richard's comments. So I think this time is obviously very quiet, volume are down, and the market is bare, right? But we see a lot of similar clients or people we talk to in the market really building the foundation to grow their business. So I'll take another example in the kind of ecosystem, payment services. So you've picked up Visa, MasterCard, PayPal, Stripe. All these guys are building the foundation to accept payment. There are studies in US that shows that merchant and retailer are planning to accept crypto for payment, but up to 75%, depending on the studies, are planning to do so. So obviously these are kind of building block that you require to actually enable a payment to flow through the blockchain. And so we're helping this type of customer to build on this. Another very good example and use case is STO. So we've done that. We're licensed in Hong Kong to do that. We printed one this summer, and a lot of engagement we have right now with asset manager, banks, family office investors. They're looking at a different way of bringing assets on the blockchain and reducing friction, allowing better liquidity, in attractive issuer, and also investor in this ecosystem. So I think that's another one where right now it's a good time to build for this. And with days like today, with the announcement that regulators are making, allowing a better prospect for this asset to evolve and be offered more securely, that just gives us a lot of great excuse and time to build for the future. So it may be in 1, 2, 3 years, but it's happening right now. Yeah.
Great, thanks. So everyone, yeah, it was good. A nice positive group, which I like. Are there any kind of a little follow-up on that question though? Are there any segments which you think are specifically challenged, which you think are going to ride this out? It's going to be a little more bumpy. DeFi, obviously, we mentioned a few of the big DeFi blowups this year. Is it going to take a while for that to come back? Do you think Metaverse is going to kind of peter out a bit as people go back to the real world? I don't know, are there any spaces which you think face larger challenges?
Just on DeFi, I think it's interesting to highlight that during the Terra Luna events and after that, actually DeFi protocol were operating pretty well. And the major point of failure were actually CeFi, or centralized entity who were either poorly managed, risk managed, or deceiving their own customer or the regulator in the market where they're offering their product. So actually, DeFi as such, it's down 2/3 of total value lock is down since the peak. So granted, we're in a bear market clearly, but I think DeFi as a product has actually shown a lot of merits, and I think it will bounce back. Yeah.
Okay, we'll move on. I guess, obviously regulation in the space, it's probably one of the more kind of difficult to get your head around parts of the ecosystem. It's very fragmented. It's in different stages across different parts of the world. But I think the one thing you can generally say is there has been a lot of regulatory engagement and action over the last year and a half, and I think that's only increasing. Obviously, it's definitely speeding up in Hong Kong, which is amazing. I guess my question is, do you think that now that there have been some issues in the ecosystem that engagement changes? Does it alter course? Do we see it speed up? How do you think this impacts those regulatory drivers? Sure, go ahead, Richard.
I'm happy to kick that off. I think it's also important to look at where we kind of came from, right? So if you look at what happened from, let's say, 2015 to 2020, you had kind of a lot of first movers in the market, and I guess their main objective was like fast revenues, move fast and break things type attitude. There was like pretty much a free pass on regulatory oversight. But I think now, to like what JD was mentioning earlier, we've now seen some of the fallout of that in terms of limited regulatory oversight. No one really looking at risk management, policy, governance, even internally on their platforms. You shouldn't be able to just keep rehypothecating funds, for example, right? Now, and again, potentially blinkered view because of the client type that we typically have, as your Citibanks, your BNPs, your Standard Chartereds, your DBSs, as they're all starting to move into this space, I think it's inevitable that regulation's going to start to come in probably a little bit thicker and a bit faster than what we've maybe anticipated. And for them, they are already regulated, institutions. They know how to navigate this space. They have departments that do this, right? And I think what's going to happen is that because of what we've seen, kind of to reiterate my point, I think this regulation will start to come in a little bit quicker than perhaps was maybe initially anticipated. Again, as these bigger organizations come in and start to actually help drive and progress the market forward. I think it's inevitable, whether we like it or not. And I'd like to think I'm a purist at heart and say that everything should be decentralized and all this, but there's practicalities and a reality around that. It's just not going to work that way, I don't think.
I think in the digital asset crypto space, having institutional participation is one of those things where we feel like it lifts the whole market up, it lifts the game up. And in that situation, clarity in regulatory policy and stances only brings further confidence in. And so I think as we get more and more of that come through, I think there's going to be greater adoption as a result of it. I think also there's a bit of this, at least the sentiment I'm getting, is that we've kind of also shifted a little bit away from regulations for the pure purpose of protection to now understanding that, oh, actually, if we get it right, there is some real inherent benefits to be reaped by society as a whole from this technology. And as a result, people are racing towards finding those better policies to be able to provide both the confidence from the clarity, but also the right road, like the rails, so that people can actually build and hopefully win out, I guess what is effectively a somewhat of a talent war as to where people will be, right, when they create this stuff.
And I agree with most of that or all of it. The other aspect I think I see is we see also some sort of regulation of the regulator around the world who are starting to align themselves. We had very, very different views on regulation between different jurisdictions. And I think that's kind of start to dissipate a little bit. Still differences, but like a day like today shows that Hong Kong is making its step forward towards retail. Other markets have been there already. Some already thinking, are we really opening in the right way? So I think as the regulator are understanding the benefits of the technology better and what can bring to the own economy, they also then align best practice around the world, and that makes, I think, life for everybody much easier. For investors to be operating globally, and for firms like us to also offering services similarly around the globe. So I see this trend to continue, yeah, for sure.
Great. Thanks a lot. And actually, that leads quite well into my next question. Thank you. So obviously today, big announcement by Hong Kong local regulators. I haven't personally got a chance to read it yet, but I'm looking forward to reading that tonight. There is a lot more talk around Hong Kong pushing to be one of the big Web3 hubs. I guess, 3 out of 4 of us live here in Hong Kong. So, but Richard, you can comment as well. Don't worry. I'd be curious to hear what everyone's view is on how that evolves. Like, how do you see that evolving? And you don't have to stick to regs. Just how do you see Hong Kong becoming a Web3 hub? Michael, you want to start?
Yeah, sure. Let me start. So I'd say that maybe 2 things about it. One is a general pattern I've observed globally amongst the crypto industry is that it's kind of splintering a little bit. There's crypto technology and then there's crypto capital markets. And I think with basically COVID pushing and accelerating people to move and work from wherever they want, crypto technology has taken let's find a location where you like the food, you like that it's sunny most of the time, you just generally like living there. And so people have been basically popping up in all these different places, whether it's Lisbon or Miami or Bali or wherever it might be. But crypto capital markets is finding itself more and more aligning to the rest of capital markets, because at the end of the day, the capital allocates from somewhere. And I think to a certain degree, Hong Kong as like this massive financial hub in the traditional capital markets will also benefit the further development of crypto capital markets as well. And so I think there's kind of an anchor in terms of Hong Kong being a place where crypto is very meaningful, plays an important part in the global scheme of things. And at the same time, when you get to a point when your company is building something great technologically, you're going to seek capital. And you're going to go to the place where there's capital. And Hong Kong is going to be one of those locations. I think the other thing, too, is that, Hong Kong's got this certain buzz and energy around it. It's really incomparable to anywhere else I can think of. And I think that as we've seen, somewhat of a relaxing of, some of the, previous kind of COVID restrictions, you're starting to, at least I feel, like the beginnings of a mean reversion back to Hong Kong, being in favor as a place where people want to, establish their businesses. And I think what the government is doing and announcing today has really helped to kind of provide further signals that this is a really, positive momentum. And so I'm very positive and bullish, the pun, about Hong Kong.
Yeah, I agree. And also, it was much needed. If you think about truly institutional investors, banks, and the likes, they've been asking for this for a very long time. Having trading partner or infrastructure partner operating in relatively opaque jurisdiction was just not cutting it. So bringing visibility and transparency in markets where they've been operating for intradigital finance and being Hong Kong or other top tier jurisdiction, it was really an enabler for the market to take the next step and mature and evolve. So it's great to see today the few announcements. One is obviously looking at opening up access to retail, but also the idea of having now ETF being traded and listed in Hong Kong. That's a major change in approach, and then equally also looking at derivatives. We know the MA and SFC are really opening door for discussion, and again STO, it's another aspect. So that really ties up with the global capital markets, where application of blockchain can then tie up very well or link up very well with global capital markets. So yeah, I think all this is a major step forward for everybody here attending today who have been expecting this to happen for a long while.
Cool, great. Richard, outside view?
I wholeheartedly agree with both of my colleagues here. No, but I think it's, I think your point about like crypto capital markets and capital markets aligning is a pretty good point. Like, and with Hong Kong having been that kind of, financial hub for so long, I think the way that, when I saw one of the announcements a couple of days ago, I was like, well, this is great news. And I went and saw a client on Friday, and they're in the kind of the securities business. And again, they're like, this is good for everyone. You need trading partners, you need liquidity partners. It's like if you're out there, no man's an island, right? If you're out there on your own and there's no one else to trade or deal with, what's the point? So I think it's going to be really good, like for Hong Kong and for probably all of our respective businesses as well. So it's a good thing.
Cool. Great. Thanks a lot, guys. Look, I'm going to take a quick pause here. We got about 5 minutes left. I wanted to see if there are any questions from the audience. Anything at all? Okay. All right. I have some other questions, but feel free to raise a hand if you think of something. Look, I guess the last kind of main question I wanted to ask you guys was, look, all three of you work at organizations which definitely capitalized well and built quite a bit probably during that last 2018 crypto winter. So if you had any advice to, like, be it builders or investors, whoever it may be, big banks, I'd like advice as much as I can get it. If you had any advice on how best to use this time based on your own experience, I think that'd be really insightful.
Yeah, get a solid infrastructure partner. Hint, hint.
Get a very well-established trading partner. Licensed custodian in Hong Kong, that helps also. Manufacturer of STO, that's another one here to help. So yeah, really build those relationships right now, because we know when the market will mature and interest will grow, you need those partners behind you to help build your own offering. So we're talking to banks every day about custody, about tokenization, about liquidity. We're talking to asset managers the same way, and everybody is building, integrating, building systems or buying system externally to build on their own infrastructure. So it's really understanding what's out there, how you integrate with with this asset class the best way for your own business.
Yeah, I would say in this time, having a lot of discipline is very key. Like discipline in how you manage the financial resources you have, the human resources that you have, ensuring that you're focused on building products that really add value to your customers. Because when markets still pick back up and mainstream, euphoria picks back up again, that's when you can really, come to market with something in a very strong position. And I think for a lot of builders and people who are like focused on like basically not just surviving but thriving through this whole thing, that discipline is very, very key.
So a slightly less self-serving point. I think having like extensibility and flexibility is quite important when you're building. So what we see is that typically what you don't want to do is fall into the trap of having, like an infrastructure that is like proprietary tech stack that's not really scalable, because what this space looks like now is going to be different in 2 years, in 5 years, in 10 years. And you don't want to go a bit further down the line and then realize that you need to completely re-platform because because you weren't future-proof. And I know it's a really difficult thing to say, oh, well, you need to be future-proof when you don't know what's going to happen, but you need to have optionality. Like going all in on, let's say, like one particular token standard, for example. Well, what happens if everyone else doesn't adopt that? What happens then? So one of the things that I guess we talk to people about is having that optionality, having a platform that's actually extensible so that as things develop and as things change, you can adapt and your business can adapt to it, and you're not left kind of playing catch up and going, oh, are we going to have to stop operations and completely re-platform for a while? What do we do? So I think that would be one of the key things, to have quite an open mind about, yes, this is current state, but what's going to happen again in future is an unknown. So yeah, try and build in flexibility and be able to be extensible and be able to build on top of your platform or your infrastructure.
All right, guys. I guess getting ready to wrap up. I don't know. Did you guys have any last messages for the group? You all right? Okay. All right, good. Look, thank you so much, JD, Michael, Richard. A pleasure. Really appreciate you guys coming today, and really appreciate all of you. Thanks for stopping by the booth and listening to what we have to say. I guess my shameless plug. Tomorrow we're going to have Sandbox here. We're going to do a fireside chat with them. Spend a little more time talking about that metaverse vertical. Please come by. And then over in the back corner, there's a list of a bunch of other panels. So thanks again. Thanks to everyone. And have a great FinTech week. Cheers.
Thank you.
Thanks, everyone.